Hello, friends. Today's video topic is very interesting because we have brought you some of the best trading psychology insights from top books that will truly help you on your trading journey. These powerful ideas will boost your mindset and improve your results in the market. So don't forget to like, share, and subscribe to stay updated with more valuable content. Let's get started. Welcome to the world of trading, where uncertainty is your constant companion. But here's the secret. Straight from Simon Rees' The Tao of Trading, embracing uncertainty isn't just a skill, it's your superpower. Let's dive into this life-changing concept and learn how to make peace with the unpredictable so you can trade with calm confidence and clarity. Simon Rees, blending ancient wisdom with modern trading, teaches us that uncertainty is the heartbeat of the markets. It's not something to fight or fear, it's the very nature of the game. In The Tao of Trading, he draws on Taoist principles to show that resisting uncertainty creates stress, clouds judgment, and leads to impulsive decisions. Think about it. How many times have you second-guessed a trade because you craved certainty? Maybe you hesitated, missed a setup, or jumped in too soon, chasing a false sense of control. Rees says this struggle comes from our human need to predict the future, a need we must let go of to thrive as traders. So, how do we embrace uncertainty? Rees' approach is both practical and profound. First, he urges us to accept that no trade, no matter how perfect it looks, is a sure thing. The market is like a river, always flowing, never fully predictable. By shifting our mindset to see uncertainty as an opportunity rather than a threat, we free ourselves from paralysis. Rees suggests starting with self-awareness. Notice when you're gripped by the need for certainty. Maybe your palms sweat, or you keep checking charts obsessively. Acknowledge that feeling, but don't let it drive your actions. Instead, focus on what you can control: your trading plan, risk management, and discipline. Re-emphasizes preparation as a cornerstone of embracing uncertainty. He advises building a robust trading system, clear entry and exit rules, risk parameters, and a process you trust. When you've back-tested your strategy and know it works over time, you don't need to predict every trade's outcome. You're playing the long game, where probabilities, not certainties, lead to success. This mindset shift is liberating. It's like stepping into a dance with the market, moving with its rhythm instead of fighting it. Rees shares stories of traders who, by letting go of control, found peace and consistency. Their profits grew as their stress faded. Another key insight is managing emotions through mindfulness. Rees advocates for simple practices like deep breathing or brief meditation before trading sessions. These techniques ground you, helping you stay present instead of spiraling into what-if scenarios. He also encourages journaling to reflect on trades, not just the numbers, but how you felt. Did uncertainty make you jumpy? Did you stick to your plan? Over time, this builds mental resilience, turning uncertainty from a foe into a familiar friend. Rees' wisdom reminds us that uncertainty isn't a flaw in the market. It's what creates opportunity. Every dip, every spike, every sideways grind is a chance to execute your plan with clarity. By embracing uncertainty, you stop fighting the market and start flowing with it. You become the trader who stays calm when others panic, who sticks to their system when emotions run high. That's the Tao of Trading. A path to not just profits, but peace. So next time the market throws you a curveball, take a deep breath, smile, and remember Rees' lesson. Uncertainty is your ally. Trust your process, let go of control, and watch how your trading and your life transforms. The market's buzzing. Stocks are soaring, and everyone's talking about the next big thing. Your friends, your newsfeed, even that guy at the coffee shop, they're all jumping on the bandwagon. Your heart races. You feel the pull to join in before you miss out. But hold on. Benjamin Graham, the father of value investing, has a warning for you in The Intelligent Investor. Following the herd can lead you straight off a cliff. Let's dive into this timeless lesson on avoiding herd mentality and discover how thinking for yourself can transform your trading. In The Intelligent Investor, Graham reminds us that markets are driven by human emotions, especially greed and fear. When prices surge, herd mentality kicks in. Everyone's buying, so it must be a good idea, right? Wrong. With his decades of market wisdom, Graham saw this pattern over and over. Market bubbles fueled by mass behavior from the roaring 20s to his own time. And the message is clear. When you follow the crowd, you often stop thinking. You chase hype instead of value. You stop asking what a company is worth and just ask if it's going up. Sound familiar? Think about the dot-com boom or the crypto hype. Those who followed blindly were left scrambling when the excitement vanished. So how do you escape the herd's grip? Graham's answer lies in independent thinking and disciplined analysis. He urges you to ignore the noise and focus on the facts. Don't ask, what's hot right now? Ask, what's this really worth? This is where Graham's famous metaphor, Mr. Market, comes in. Mr. Market is your moody business partner. Some days he's euphoric, offering crazy prices. Other days he's depressed and practically giving stocks away. Your job is not to follow his mood swings, but to evaluate his offers calmly. Buy when prices are low. Sell when they're high. Simple? Yes. Easy? Not quite. Because let's face it, the pull of the herd is powerful. We're wired to feel safe in groups. When stocks are skyrocketing, it feels risky to sit on the sidelines. When markets crash, it's terrifying to buy. But Graham gives you a shield, the margin of safety. By only investing when a stock's price is well below its true value, you give yourself a cushion. This helps you stay calm when the crowd panics and cautious when the crowd celebrates. It's like having a map when everyone else is lost. Graham also teaches self-awareness. He says, notice the signs. When you feel like joining the crowd just because everyone else is doing it, pause. Take a breath. Ask yourself, am I following my process or the herd? That's where journaling can help. Track your trades and your reasons. Were you buying because of solid analysis or because the headlines were screaming, buy now? Over time, this habit builds discipline and protects you from emotional decisions. And if you ever need proof that this works, look no further than Graham's most famous student, Warren Buffett. Buffett didn't follow the crowd. He followed value, and the results speak for themselves. Graham's wisdom shows that real success in trading comes not from fitting in, but from standing out. When you think independently, you buy low when others are greedy and sell high when they're afraid. You become the calm in the storm, the voice of reason when others are shouting. In The Mental Edge in Trading, Jason Williams offers a game-changing insight, mindfulness. Now, this isn't some fluffy meditation fad. It's a powerful, proven tool to tame stress, sharpen your focus, and give you the mental edge you need to win in the markets. Let's dive into how this one practice can transform your trading from chaotic to calm. Williams, who's not just a trader but a psychologist, knows firsthand how stress wrecks traders. He explains that stress isn't just a feeling, it's a full-body reaction. Your brain goes into fight or flight mode, your palms sweat, your breathing shortens, and before you know it, you're clicking buy or sell without thinking. Or worse, you freeze and miss your moment. His solution? Mindfulness. The practice of being fully present, here and now. It's about anchoring yourself in the moment, tuning into what is, not what might be. So how do you apply it? Williams lays out practical, easy-to-follow steps to bring mindfulness into your trading life. Start with a pre-trading ritual. Before you even open your platform, just sit still. 5 minutes. Focus on your breath. Inhale deeply. Exhale slowly. Feel the air moving in and out. That's it. This one simple habit calms your nervous system and prepares your mind for whatever the market throws at you. He shares stories of traders who once panicked during high volatility, but after adopting this ritual, they stayed cool, acting based on strategy, not stress. Now, during trading, mindfulness is your anchor. Williams warns against falling into the what-if trap. What if the trade fails? What if I miss out? These thoughts pull you out of the present and into fear. Instead, he says, focus only on the data in front of you, price action, your trading plan, your risk levels. And when stress creeps in, do a quick body check. Are your shoulders tense? Is your jaw clenched? Williams recommends a fast body scan to release that tension. Loosen up, reset, and refocus. You're not ignoring the market, you're seeing it more clearly. Then comes the post-trading phase, and this is key. After your session, take a moment to journal mindfully. Don't just jot down the trades. Write about how you felt. Were you calm, stressed, focused, scattered? Over time, this practice builds awareness. You'll start spotting patterns, like how certain market conditions trigger your stress, and learn to catch those reactions earlier next time. Williams gives real-life examples of traders who were stuck in losing streaks, but turned things around using mindfulness. They didn't change their systems. They changed their mindset. And the results? More discipline, better execution, and growing confidence. Why does this matter so much? Because trading isn't just about charts, indicators, or strategy. It's a mental game, and stress is one of your biggest opponents. If you don't manage it, it manages you. But with mindfulness, you take back control. You stop reacting. You start responding. You become the trader who sees a fast-moving market and says, "I'm ready." You ride out the uncertainty with a steady hand and a clear head. You're not just surviving, you're thriving. So next time you feel the pressure rising, breathe. Come back to the moment. And remember what Jason Williams teaches. Your greatest edge isn't in your system, it's in your state of mind. The market's moving fast, your gut's screaming, do it now. And before you even blink, you're in a trade with no plan, no analysis. Just adrenaline. Sound familiar? That, my friend, is impulsivity. And according to Come Into My Trading Room by Alexander Elder, a master trader and psychologist, it's one of the most dangerous habits a trader can have. But here's the good news. It's not permanent. You can beat it. You can turn those chaotic impulses into calm, calculated decisions. And once you do, everything about your trading changes. In this powerful book, Elder digs into the psychology of trading, and he doesn't sugarcoat it. He flat out says it. Impulsivity is why so many traders lose money. It sneaks in when emotions take over, whether it's excitement, boredom, frustration, or revenge after a loss. Maybe you're sitting there during a slow session and you see a candle pop, and boom, you jump in just to feel something. Or maybe you just took a hit and want to win it back fast. Elder's seen it all, and he makes it clear, impulsive trading isn't a market problem, it's a you problem. So how do you fix it? Elder gives us a step-by-step approach. And the first step? Have a trading plan. Not just in your head, written down. Your entries, exits, and stop-loss levels. This plan is your anchor. It's your safety net when emotions try to pull you off course. He compares trading to flying a plane. A pilot doesn't take off without a checklist, and you shouldn't either. Your trading plan is that checklist. Elder tells stories of traders who flip their performance around just by following their rules. It's proof. Discipline beats drama. But that's not all. Elder says the best traders prepare deeply. Before the market even opens, you should already know what you're looking for. Analyze the charts, study the trends, know your indicators. Because when you've done the prep work, you trust yourself. You're less likely to panic or chase shadows. He recommends using something called a decision tree. Think of it like a map. If price hits X and RSI confirms, then I buy. This simple structure stops you from relying on emotion. You're not just guessing anymore, you're following a process. Another crucial weapon in the fight against impulsivity? Self-awareness. Elder says you need to start tracking your emotions just like you track your trades. Feel the urge to trade? Stop. Breathe. Ask yourself, is this part of my plan or am I just reacting? That one pause could save you from a costly mistake. He also pushes hard for keeping a trading journal. Not just a log of trades, but your thoughts, your moods, your impulses. What triggered you? Was it boredom? Was it revenge after a loss? Over time, you'll start seeing patterns, and once you can see them, you can break them. And to stop impulsivity from turning into a spiral, Elder says set strict limits. Limit the number of trades per day. Limit your exposure. These rules aren't chains, they're safeguards. Why is all this so important? Because when you trade on impulse, you're not trading. You're gambling. And gamblers, they don't survive long in this game. But when you trade with discipline, when you pause and follow your plan, you become unstoppable. You're the calm in the chaos, the one who's not chasing moves, but waiting for the right ones, the one who's building long-term success, one smart decision at a time. So the next time you feel that itch, that urge to click, just because it feels right, pause, pull out your plan, trust your prep, and channel the discipline Elder drilled into this book. You've got what it takes to break free from impulsive trading. One choice at a time. One trade at a time. Ever wonder why some trades feel like a triumph while others leave you frustrated and second guessing? The answer doesn't lie in the market, it lies within you. In Enhancing Trader Performance, Dr. Brett Steenbarger, a trading psychologist known for helping elite performers, reveals one of the most powerful tools in your arsenal: self-awareness. Now, this isn't just about knowing your strategy. It's about understanding yourself, your habits, your emotional triggers, your strengths, and yes, even your blind spots. Because when you master your mind, you take control of your trading outcomes. Steenbarger makes one thing very clear. Trading success isn't just about reading charts or timing entries. It's about psychology, specifically your ability to recognize and manage what's going on in your head. Without self-awareness, you're flying blind. You'll react impulsively instead of responding with clarity and control. But when you are self-aware, you notice when fear creeps in, when greed tempts you, when frustration pushes you to overtrade. And more importantly, you do something about it before it ruins your trade. So how do you build this kind of awareness? Steenbarger's approach is like training at a mental gym. Step 1, start tracking your performance with brutal honesty. Don't just record entry and exit points. Write down your emotional state. Were you calm, anxious, overconfident? Steenbarger shares stories of traders who uncovered powerful patterns in their journals, like always doubling down after a loss or hesitating in fast-moving markets. Writing it all down turns your behavior into a mirror. It's not about judging yourself. It's about understanding what makes you tick. Next, Steenbarger urges you to identify your strengths and weaknesses. Maybe you're great at spotting trends, but struggle to stick to your stop losses. Maybe you thrive during fast, volatile markets, but lose focus when things slow down. He even recommends taking a simple personality inventory to understand your natural tendencies. Are you a risk taker or more cautious? Do you get bored easily or crave structure? Once you know this, you can choose a trading style that fits you. Many of Steenbarger's clients only found real success after aligning their strategies with their true nature, like a day trader who switched to swing trading and finally felt at peace. But self-awareness isn't just for after-hours reflection. Steenbarger stresses the importance of real-time awareness, checking in with yourself during trading. If you feel your heart racing or your mind spinning, that's your signal to pause. Step back, breathe, refocus. He suggests quick mindfulness techniques, like a 10-second breathing reset to stay grounded when the pressure rises. Over time, this practice helps you stay calm and clear even in the heat of market action. Another powerful habit? Review your past trades not just for technical mistakes, but for emotional ones. Did you cut a winner too early because you got nervous? Hold a loser too long, hoping it would come back? By spotting these patterns, you give yourself the chance to break them before they repeat. Steenbarger says, transforms you into your own coach. You become the trader who knows when to sit tight, when to push harder, and when to step away. You don't just react, you respond with clarity and confidence. So grab that journal. Start paying attention to your inner world, because trading isn't just a numbers game, it's a mental game. And the more you know yourself, the more power you hold over your performance. Van K. Tharp, a legendary trading coach, shines a spotlight on this sneaky emotion in Trade Your Way to Financial Freedom. He teaches us that mastering boredom isn't just about waiting it out. It's about turning those idle moments into golden opportunities for growth and discipline. So let's dive in and learn how to make boredom your ally. Tharp knows trading isn't just about action. It's about patience. He warns that boredom often pushes traders into reckless decisions. When the market is quiet, the urge to trade can feel overwhelming, like an itch you have to scratch. Maybe you jump into a low-probability trade just to feel alive. Or maybe you start tweaking your system out of frustration. Tharp has seen this lead to losses time and time again. His key insight? Boredom is not a signal to act. It's a test of your discipline. So, how do you handle boredom? Tharp's method is built on structure and mindset. First, he stresses the importance of a solid trading plan. Your plan is your roadmap. It tells you when to trade and when to sit tight. When boredom strikes, lean on your plan. Tharp advises setting clear criteria for your trades, specific setups, defined risk levels, and ideal market conditions, so you don't get tempted to jump in just because you're restless. He shares stories of traders who avoided costly mistakes by sticking to their rules, even when the market felt like a total snooze. Next, Tharp encourages proactive preparation during downtime. Use quiet periods to sharpen your skills. Review past trades, backtest new strategies, or study market patterns. These activities keep your mind engaged without risking any capital. Great traders treat downtime as a chance to grow, not a void to fill with impulsive trades. Tharp suggests setting clear goals for these non-trading activities, like analyzing 10 charts or reading a chapter on market psychology, to stay productive. This turns boredom into a powerful tool for sharpening your edge. Another key is self-awareness. Tharp urges you to recognize the signs of boredom. Maybe you're fidgeting, scrolling aimlessly, or feeling restless. When you notice these signals, pause and redirect your energy. He recommends short breaks, a quick walk, or a breathing exercise to reset your focus. Tharp also champions keeping a trading journal where you track when boredom leads to poor decisions. By noting these moments, you learn to catch yourself before acting rashly. His clients' stories show how this awareness helped them stay patient, waiting for high-probability setups instead of forcing trades. Tharp's wisdom teaches us that coping with boredom builds the discipline to trade only when the odds are in your favor. You become the trader who stays calm in quiet markets, who uses downtime to grow stronger, not weaker. That mindset separates the pros from the amateurs. So next time the market lulls and boredom creeps in, take a deep breath, stick to your plan, and channel Tharp's advice. Turn those quiet moments into your secret weapon. You're not just waiting, you're building the discipline to win. Let's get real about that relentless voice in your head, the one insisting every trade must be perfect, every decision flawless. You find yourself analyzing endlessly, doubting every move, and beating yourself up when things don't go exactly as planned. Sound familiar? That's perfectionism, and it's quietly holding you back more than you realize. In The Daily Trading Coach, Brett Steenbarger, a master of trading psychology, shows us how to break free from this trap and trade with a sense of freedom and flow. He reveals that letting go of perfectionism isn't about lowering your standards. It's about embracing a mindset that fosters growth, resilience, and yes, better results. Here's the truth Steenbarger shares. Perfectionism is a silent saboteur. It's the belief that you must win every trade or never make mistakes. But the market doesn't care about your need to be flawless. In fact, chasing perfection often leads to hesitation, overthinking, and emotional exhaustion. You might skip good trades because they don't feel just right, or stubbornly hold on to losing positions, hoping for a miracle. Steenbarger's powerful insight: trading success is about consistency, not perfection. When you let go of that impossible ideal, you unlock your true potential. So, how do you do it? Steenbarger's approach is both practical and empowering. First, reframe your mistakes. Every losing trade isn't a failure, it's valuable information. He shares examples of traders who grew by treating losses as data points to learn from, not reasons to beat themselves up. Instead of obsessing over outcomes, focus on process-oriented goals, sticking to your risk management, following your strategy faithfully. This shift moves the pressure away from being perfect and towards steady progress. Another powerful tool is deliberate practice. Review your trades regularly, not to obsess over errors, but to spot one thing you did well and one area to improve. This cultivates a growth mindset where getting better is the priority, not being flawless. Steenbarger also suggests visualization exercises. Imagine yourself handling trades calmly, even when things don't go exactly as planned. By mentally rehearsing flexibility, you train your brain to stay composed under pressure. Traders who adopt these practices often find their fear of mistakes diminishes and confidence takes over. And here's something crucial: self-compassion. Steenbarger urges you to treat yourself like a coach rather than a harsh critic. When a trade goes wrong, don't spiral into "I'm a terrible trader." Instead, ask, "What can I learn from this?" He encourages writing down 3 things you're grateful for in your trading journey. Maybe a good strategy, a lesson learned, or simply your persistence. This simple act, grounded in positive psychology, helps you stay balanced and resilient. The traders Steenbarger worked with who embraced self-kindness found they made better decisions and felt less stress overall. Why does this matter so much? Because perfectionism chains you to unrealistic expectations. But letting go frees you to trade authentically, to adapt, learn, and grow. Great traders aren't perfect. They are consistent, flexible, and focused on the process. They take calculated risks and treat every trade as a step on their journey, whether it's a win or a loss. This mindset turns trading from a high-pressure quest for flawlessness into a rewarding path of self-discovery. So, next time you feel trapped by the need to be perfect, take a deep breath. Embrace your humanity. Celebrate your progress, learn from your mistakes, and trade with freedom. You're not chasing perfection. You're building resilience and mastery. In Mastering the Trade, John F. Carter, a veteran trader known for keeping things real, dives deep into this emotional beast. He shows us how to conquer FOMO, stay disciplined, and trade with clear confidence. This lesson could change your trading game for good. Carter explains that FOMO is more about your own fear of being left behind than the market itself. When a stock or crypto is skyrocketing, FOMO sounds like an urgent siren, pushing you to chase moves without a plan. Carter's been there too. He knows the temptation to jump into a rally, only to watch it reverse and take your money with it. His key insight? Left unchecked, FOMO fuels impulsive trades, blown accounts, and regret. But if you use the right tools, FOMO becomes a signal to stay sharp, not to act rashly. So, how do you handle it? Carter's answer is discipline and perspective. First and foremost, stick to your trading plan like it's your lifeline. Your plan, built on tested setups, clear entry rules, and solid risk management, keeps you grounded when FOMO tries to take over. Carter advises setting crystal clear trade criteria. What signals must line up before you move? When the market screams, buy now. But your setup isn't there. Resist the urge. He shares stories of traders who avoided disaster simply by honoring their rules, even when FOMO's call was deafening. Preparation is another powerful weapon. Carter emphasizes doing your homework before the market opens. Study your charts, identify high-probability setups, and know your risk limits inside out. When you're well prepared, you're less likely to chase moves out of fear. He also suggests focusing on markets or assets that fit your style, whether stocks, options, or futures, so you don't get pulled into unfamiliar territory just because it's trending. Carter's own experience trading volatile markets shows how preparation builds confidence and quiets FOMO's pull. Self-awareness is critical too. Carter urges you to recognize the signs of FOMO: a racing heartbeat, scattered thoughts, or the urge to act right now. When you notice these feelings, pause. Take a moment, step away from your screen, breathe deeply, or even splash cold water on your face. This simple reset breaks FOMO's grip and helps you return to your plan. Carter also recommends journaling your trades, noting when FOMO influenced your decisions. By tracking these moments, you learn your triggers and keep control. His traders' stories show how this practice turned impulsive chasers into disciplined winners. Why does this matter? Because FOMO can turn trading into a frantic frenzy, but discipline transforms it into a true craft. Carter's wisdom teaches that handling FOMO isn't about ignoring opportunities. It's about choosing the right ones. You become the trader who waits patiently for the perfect setup, who doesn't chase hype, and who trusts their process. This mindset builds not only profits, but peace of mind. In a random walk down Wall Street, Burton G. Malkiel, a sharp economist known for cutting through the clutter, shows us why having a long-term perspective isn't just smart, it's essential. It's about staying sane and building lasting wealth, not chasing every twist and turn. Malkiel makes it clear, markets are unpredictable day to day. Those price swings? Like a roller coaster designed to tempt you into reacting impulsively, buying on hype, selling in panic. But here's the truth. Successful traders and investors focus on the long haul. The short-term noise fades away, but the long-term trends, grounded in economic fundamentals, endure. He points to history, market bubbles, crashes, and recoveries, to prove that those who keep their eyes on the big picture come out ahead. Meanwhile, traders chasing every daily move often stumble. So how do you maintain that long-term view? Malkiel's advice is practical and clear. First, define your goals. Are you aiming for quick profits or building wealth over years? Anchor your strategy to that long-term vision. When you do, the urge to overreact to daily price swings loses power. Malkiel recommends focusing on broad market trends or fundamentals. Think economic growth, company earnings. rather than getting distracted by intraday jitters. This focus helped investors survive wild times like the 1970s and the 2008 crash. Preparation is critical. Malkiel champions diversification, spreading your risk across assets to smooth out the bumps. For traders, that means never putting all your chips on one stock or bet. He also emphasizes learning market history, seeing how returns average out over time despite daily ups and downs. That knowledge builds confidence, reminding you that short-term losses are just minor blips in a much bigger story. His examples, like the steady climb of index funds, highlight how sticking to a long-term plan pays off. Self-discipline is the final piece. Malkiel warns against getting sucked into the noise, all those headlines, social media buzz, hot tips. Set rules to avoid reactive trading. Maybe adjust your portfolio only at set times or stick firmly to your risk limits. Track your progress by long-term goals, not daily profit and loss. Keeping a trading journal helps. Note how market noise affects your mood and decisions. Malkiel's stories of investors who stayed steady, like those following low-cost index strategies, show the power of patience and persistence. Malkiel teaches that trading isn't about winning every day. It's about winning over time. You become the trader who sees volatility as opportunity, stays calm when others panic, and builds wealth with patience. So next time the market's roaring and your pulse races, zoom out. Focus on your long-term goals and channel Malkiel's wisdom. You're not just trading, you're building your future. In the Little Book of Behavioral Investing, James Montier, a behavioral finance expert, dives deep into the psychology of greed and shows us how to keep it in check. Get ready to tame this powerful emotion, trade with discipline, and protect your hard-earned profits. Montier explains that greed is natural, part of being human, but it gets amplified in the high-stakes world of trading. When prices keep rising, greed pushes you to take bigger risks. Maybe you hold on to trades too long, double down on a position, or chase after the hottest market moves. Montier's research highlights how greed fuels market bubbles, like the dot-com boom, when investors ignored fundamentals, chasing endless gains. His key insight? Greed clouds your judgment. It makes you forget about risk and focus only on reward. To succeed in trading, you must recognize greed and control it before it controls you. So how do you keep greed in check? Montier's approach is all about behavioral discipline. First, he stresses the importance of a clear risk management plan. Set strict rules before you even enter a trade. Position sizing, stop losses, profit-taking targets. Think of these as guardrails, helping you stay on track when greed tries to push you off course. Montier shares examples of investors who preserved capital simply by sticking to their limits, even when markets tempted them to let it ride. By locking in profits at set points, you resist chasing every last dollar. Preparation is another key weapon. Montier advocates for a value-based approach. Focus on the fundamentals of an asset, not the hype. Before trading, ask yourself, is this move based on solid data or just speculative frenzy? This clarity helps you avoid greed-driven mistakes, like buying into overpriced stocks. He also suggests stress testing your strategy. Ask, what if this trade goes wrong? By planning for downside scenarios, you balance greed's optimism with realism. Montier's analysis of historical bubbles shows how this mindset saved investors from devastating losses. Self-awareness is critical too. Montier urges you to spot greed's warning signs, feelings of euphoria, overconfidence, or ignoring your trading plan. When you sense that rush, pause. Take a step back. Write down why you're tempted to act. Keeping a trading journal is key. Record when greed influenced your decisions, like holding winners too long. Montier's case studies reveal how journaling builds accountability, helping traders stay disciplined. Over time, you learn to catch greed early and course correct. Why does this matter? Because greed can turn traders into gamblers, chasing highs at the expense of reason. Montier's wisdom shows controlling greed isn't about killing ambition. It's about channeling it wisely. You become the trader who takes profits methodically, who sticks to rules when emotions surge, and who builds wealth without reckless risks. This mindset protects not just your account, it gives you clarity and confidence to trade smart. Managing Cognitive Overload from Trading Psychology 2.0 by Brett Steenbarger. Traders? Imagine this. The market's moving fast. Charts flashing, news popping up, indicators everywhere. It feels like your brain's juggling a million things at once. Prices, volume, news headlines, your trade plan, all screaming for attention. This is cognitive overload, and it's a real challenge in trading. Brett Steenbarger, in Trading Psychology 2.0, gives us powerful strategies to handle this flood of information so we can think clearly and trade confidently. Steenbarger explains that cognitive overload happens when your brain tries to process too much data simultaneously. In fast markets, this can lead to confusion, poor decisions, and missed opportunities. Instead of making smart moves, you freeze or act impulsively, overwhelmed by the noise. So how do you manage cognitive overload? Steenbarger's answer is simple but powerful. Prioritize and simplify. First, focus on the key data that truly matters for your trading edge. Not every piece of information deserves your attention. Identify the few signals or setups that align with your strategy, whether it's a specific pattern, a volume spike, or a trend confirmation. By filtering out distractions, you free your mind to concentrate on what drives your decisions. Next, simplify your decision-making process. Steenbarger suggests creating clear, step-by-step rules for entries, exits, and risk management. When the market speeds up, these rules act like a trusted roadmap. You don't have to think through every detail on the fly. Instead, your plan guides you, reducing mental clutter and emotional stress. Preparation also plays a key role. Steenbarger encourages traders to develop routines before the market opens, studying charts, noting potential setups, and setting alerts. This mental groundwork builds confidence and reduces the scramble to absorb new info during trading hours. Self-awareness is another critical tool. Steenbarger advises checking in with yourself regularly. Are you feeling overwhelmed? Is your mind scattered? When overload strikes, take a brief pause, step back, breathe, and refocus on your core plan. This simple reset can prevent impulsive mistakes driven by too much noise. Steenbarger's approach turns cognitive overload from a threat into an opportunity. By prioritizing, simplifying, and staying aware, you become the trader who makes smart, confident decisions, even in the fastest markets. Alexander Elder, in The New Trading for a Living, stresses one crucial trait: mental toughness. It's the resilience to face market volatility and personal setbacks without losing your edge. Let's explore how to build this mental muscle and keep bouncing back stronger. Elder explains that mental toughness isn't about being unshakable. It's about preparing yourself mentally to handle adversity, then recovering quickly. Trading is full of ups and downs, and those who thrive aren't the ones who avoid losses, but the ones who stay disciplined, calm, and focused through every challenge. So how do you cultivate this toughness? Elder highlights mental preparation as the foundation. Before the market even opens, you need a clear mindset. Accept that losses happen, expect volatility, and commit to sticking to your plan no matter what. This readiness builds a mental shield against panic and frustration. Recovery strategies matter too. When a trade goes against you or a losing streak hits, Elder recommends stepping back. Take time to reflect, recharge, and avoid revenge trading. This pause prevents events' emotional spirals and helps you learn from mistakes without self-judgment. Another key is self-discipline. Mental toughness grows when you consistently follow your rules, position sizing, stop losses, and risk limits, especially during stress. Sticking to your system, even when the market tests you, shows strength and builds confidence over time. Why is this so important? Because resilience transforms setbacks into stepping stones. Elder's wisdom teaches that mental toughness lets you stay in the game longer, trade smarter, and protect your capital from emotional decisions. It's what separates traders who quit after losses from those who keep growing and winning. So next time the market shakes you, remember Elder's advice. Prepare your mind, protect your emotions, and recover with grace. Mental toughness isn't just a skill, it's your greatest trading asset. Traders, let's talk about a common trap, judging your trades not by how you made decisions, but only by the results. This is called outcome bias, and it can seriously mess with your growth. Richard H. Thaler, in Misbehaving, shines a light on why this happens and how you can avoid it to become a smarter trader. Outcome bias means you praise a risky trade just because it made money, or beat yourself up over a good decision that ended up losing. But here's the truth. Trading success isn't about luck. It's about making logical, disciplined choices based on a solid strategy. Thaler shows us that judging by outcomes alone is like blaming a pilot for bad weather. It's unfair and unhelpful. So, how do you avoid this bias? Thaler urges traders to focus on the process, not just the profits or losses. Did you follow your trading plan? Did you manage risk properly? Did you stick to your rules even when emotions tried to take over? These are the questions that matter because consistent process leads to long-term success. He also highlights the importance of reviewing trades with a clear, non-emotional mind. When you analyze trades, separate the decision-making steps from the result. This helps you learn what works and what doesn't, independent of the outcome. Thaler's research shows that this disciplined evaluation helps traders avoid emotional swings and improve over time. Thaler's wisdom reminds us, even a losing trade can be a win if it's made logically, and a winning trade can be a loss if it was reckless. Your goal is to become a trader who trusts the process, not just the scoreboard. So next time you review your trades, pause and ask, did I make the right decision with the information I had? Celebrate your process, learn from your mistakes, and let go of judging by outcomes alone. This mindset shift turns trading into a consistent craft, not a game of luck. Ryan Jones in The Trading Game warns us about the hidden dangers of success. When the wins stack up, complacency can sneak in, tempting you to stray from your rules and take unnecessary risks. Staying grounded during these high points is crucial if you want long-term success. Jones explains that winning streaks often create a false sense of invincibility. You might start thinking, I can't lose, or this is too easy. That confidence, while natural, can quickly morph into overconfidence, leading traders to ignore their own strategies or lower their risk controls. Jones calls this the winning streak trap, a mental state where past success clouds your judgment and lures you into careless decisions. So how do you stay grounded? The answer is simple but powerful: consistent discipline. Jones stresses that the very rules and strategies that helped you succeed should never be tossed aside just because things are going well. Your trading plan is your anchor. It keeps you steady and prevents the slippery slope toward recklessness. No matter how many wins you rack up, stick to your entry criteria, position sizing, and stop-loss rules without exception. Preparation plays a big role here too. Jones suggests revisiting your trading plan regularly, especially during winning streaks. Remind yourself why those rules exist. They're designed to protect your capital and keep your emotions in check. He advises keeping a trading journal to track not just your trades, but also your mindset during these hot streaks. When you see patterns of relaxed discipline or risk creep, that's your cue to tighten the reins. Jones also highlights the importance of humility. Success doesn't mean perfection. Markets are unpredictable, and even the best traders face losses. Accepting this reality keeps your ego in check and guards against complacency. He shares stories of traders who lost everything because they got cocky during winning streaks, ignoring warning signs and chasing bigger profits. These cautionary tales underscore why humility is a vital part of trading psychology. Another key to staying grounded is managing your emotions. Winning streaks can bring excitement and adrenaline, but Jones reminds us that emotional highs can cloud rational thinking. When you feel a surge of confidence after a big win, pause and take a moment to breathe. Reflect on whether your next trade is based on your strategy or just riding the wave of success. This simple habit creates space for clear decisions, preventing impulsive moves fueled by ego or greed. Jones also stresses the value of risk management during winning streaks. It's tempting to increase position sizes or loosen stop losses when you're confident, but this is when discipline matters most. Protecting your gains is just as important as making them. By maintaining strict risk controls, you ensure that a single loss won't wipe out the hard-earned profits from your streak. Why is all this so important? Because winning streaks, if mishandled, can be the downfall of even the best traders. Jones teaches us that true mastery is not about the highs, it's about how you handle those highs. Staying grounded means being consistent, humble, and vigilant, no matter what the scoreboard says. It means honoring your process every day, not just when times are tough. Thanks for watching, friends. If you found this video helpful, Don't forget to like, share, and subscribe for more powerful trading tips and psychology insights. Your support means a lot and helps me bring you even better content. Until next time, trade smart and stay focused.